The top business stories live from the Sky News City studio. A surprise fall in UK house prices, down for the second month running, according to Nationwide. Shares of GSK rise as the drugs giant says profits this year will be better than expected. Plus, could using street cabinets be the answer to the UK's electric vehicle charging point shortage? Good morning, this is Business Live with me, Ian King. UK house prices unexpectedly fell in April for a second month running, according to Nationwide Building Society. The UK's second biggest mortgage lender said today that house prices fell by 0.4% in April. That followed a fall of 0.2% in March. As a result, the annual rate of house price inflation has fallen from 1.6% in March to 0.6%. Nationwide said the fall probably reflected ongoing affordability pressures, with longer-term interest rates rising in recent months, reversing the steep fall seen around the turn of the year. It said house prices were now around 4% below the all-time highs recorded in the summer of 2022. Some other business news stories for you now. Shares of GSK have risen by nearly 1.75% today after the drugs giant said profits for the year would be better than expected. GSK now expects to grow operating profits this year by between 9 and 11%, up from the previous guidance of 7 to 10%, thanks in particular to strong demand for Shingrix, its blockbuster treatment for shingles, as well as for Arexvy, its treatment for respiratory syncytial virus. Well, GSK was reporting sales of £7.4 billion for the first 3 months of the year, which was up 10% on the same period last year, with its vaccine sales rising by 16%. Next said this morning that its sales during the first 3 months of its financial year were slightly better than expected, but insisted it was not changing its profits or sales forecasts for the year as a whole. The fashion retailer said this was because it expected sales during the current quarter to be weaker than they were in the same period a year ago, when it benefited from particularly warm weather from late May through to the end of June. Next said that sales during the 13 weeks to last Saturday were up by 5.7%, slightly better than the 5% it had been expecting. Here's the next share price now. More or less unchanged right now, in fact, off a couple of coppers. And the consumer healthcare group behind Sensodyne toothpaste and Advil painkillers said this morning that it was benefiting from the impact of recent price increases. Haleon, whose other brands include Centrum Minerals and Vitamins, was reporting a 3% rise in underlying sales during the first 3 months of the year. But the company, which recently sold its chapstick brand, warned that it expects the operating environment to remain challenging this year. The company yesterday announced the closure of a factory in Maidenhead in Berkshire, with the loss of potentially 435 jobs. Haleon shares are currently off 2.75%. Now, the UK's competition regulator recently called for more competition in the local electric vehicle charging network. So it may be pleased by news today that an arm of BT Group has today begun trials that could address the shortfall in public EV charging infrastructure. Etc., which is BT's startup incubation hub, has installed its first EV charge point powered from a street cabinet traditionally used to store broadband and phone cabling in East Lothian. Well, with me now is Tom Guy. He's managing director of Etc. Tom, welcome to you. Why did you choose this particular location?
So we've been working with a number of different councils, and East Lothian just were very, very positive in wanting to install their first EV charger. They were the ones that went the fastest. So it's been fantastic to work with them. And as we said, we launched and opened it yesterday.
What's involved in converting one of these cabinets to charging infrastructure? Is it a complicated business?
It is for me, but for engineers, no. It's basically what we're doing is drawing some of the power, so it looks after the copper broadband, and we're drawing some of the power to allow us to utilise for a charging pole which has 2 chargers, so you could charge 2 cars at the same time. So it's utilising that power. Our tests and our lab results show that that the actual broadband service obviously remains unaffected. Over time, those cabinets will become redundant as we all move to full fibre in the UK, and obviously when that happens, we have more power available, so we can put in more chargers.
Necessity is the mother of invention. I mean, how many of these cabinets does BT have?
So in total, because obviously it's been powering broadband for so long, it's about 90,000. We believe that it's around 60,000 are probably the right for us to be able to use. We're in a pilot at the moment, so it's all about just learning, seeing if all of those cabinets could be used. Our pilot is probably a few hundred is what we're looking at. But during the pilot, it's all about everything from the infrastructure, the installation, and most important, what does the customer think? What's that experience the customer's having?
So that is presumably going to judge whether this pilot's a success or not. Take up.
Absolutely. There's always complexities of anything that you do with infrastructure. So it's learning that, you probably can see with this cabinet, it's absolutely everywhere. They're all in different places. So it's just going through all of that. But one of the things we do know is that also the charging network today is obviously, woefully short. I think we're about 55,000+. The government believe we need 300,000. Others probably a little bit more of that, more than that. And I think this is the challenge that we're obviously trying to help solve.
I gather there's going to be another exercise in West Yorkshire. How many more of these sort of trials will you need to run before you can make a definitive decision on rollout?
So we haven't put a number on it. We're talking up to a few hundred that we believe that we probably need to put into ground just to test all of the different variations that we're going to see through different. As I said, cabinets are everywhere, different streets, different usages, and really it's all about that customer experience as well. What are they feeling? What are they seeing when they get to the charger? We know from our customer labs there's a number of challenges. It's charge anxiety, it's range anxiety. 80% of customers that have got petrol and diesel cars aren't moving to EV because of the structure as well.
You mentioned that you've got 90,000 cabinets and all. How swiftly could you roll this out, these conversions?
That's what the pilot will show us, in terms of, seeing how quickly we can move through, not just the installation, but the parts around working with councils and getting the planning permission and everything that you need to do to be able to, utilise and upscale those cabinets. But, to be honest, most of the people that we've spoken to now, they love the idea that we're recycling, upscaling something, that's been in the streets for decades and utilising it for something else that helped the country before, which was broadband, and now hopefully with the EV charging. But the pilot is the most important thing at the moment.
And for folk in East Lothian who might want to avail themselves of this, it's free for the month. Is that
That's right. Yeah, it's free for the month. We've had a number of customers up there already. I believe one of the Scottish ministers is in there today, just to see how it's all going.
All right, Tom, got to leave it there. Good to talk to you.
Thank you very much.
Thank you. Now, there's long been resentment among retailers selling via tech giants like Google and Amazon at the amount of money that they have to spend advertising with those businesses in order to drive sales. Well, now a new platform called Cha-Ching is promising retailers what it claims is a better deal by allowing them to choose their cost per order, most of which is then passed on to consumers via a cashback. Well, among those who've signed up for the department store chain Phoenix and the formal wear chain TM Lewin, I've been speaking with one of the founders, Alistair Lukes.
The team, all of us involved, and the advisors and ambassadors are trying to achieve two things. First one is raise awareness of the fact that shopping online, which is super convenient and brilliant to do, is just becoming incredibly expensive because of the fact that there are only 3 or 4 big companies that own the toll booth, if you like. So that's the first thing we're trying to achieve, awareness. And then the second thing is, well, you can't just complain and throw rocks at the moon. What are we doing to try and fix it? So is there a way that you can find a better way for e-commerce to work? And that's a big ask, obviously.
Why do you think the likes of Amazon and Google have been getting away with charging the fees that they do?
I think you have to have huge admiration for these toll booths that they built. And you look at it and you say, I mean, I always think back to the gold rush. Everyone talks about it. Everyone says the people that made the money were the picks and shovel sellers. They've put themselves in the position that says, you come through us and therefore we charge the toll. And they've done a superb job of it. But when you look at the combined profits, you're talking towards $1 trillion. That means that there is an awful lot of inefficiency in that system.
How will what you're doing differ from, say, Rakuten?
So, yeah, and something that, to be fair, I've learned all of this from the founder of the company, Max, very smart young man from Chicago. But on one side of the marketplace, you have loyalty. So you've mentioned Rakuten, there's Honey, there's all these cashback sites. What they are is asking for more discounts. So what they're saying to the merchant is, we've got some eyeballs, we've got some customers, give more discount and we'll hook them in. We're not going anywhere near that. We think if a merchant wants to charge £200 for a product, that's their obligation, it's their choice, no problem. But this broker fee that they're paying to a third party, a marketplace, a big search engine, a logistics company, shouldn't be 50%. every industry has its early days, mobile phone networks, all the rest of it. But eventually you have to get some sense of equilibrium in it. And we're just saying to people, why don't you set what you're prepared to pay rather than just sort of spray and pray with your advertising money?
And how many active users are you targeting in the first 12 months?
Yeah, I mean, obviously just announcing, and so honoured to be able to talk about it here. Look, we think it's one of those ideas that why wouldn't you want to share it with your friends? We've got a load of partners ranging from the Great Ormond Street Hospital, which is a wonderful team to partner with, the NHS, people that we think will really benefit from the service, and we expect people to tell their friends about it. So I'd be disappointed if we didn't have millions of users by Christmas this year.
Wow. And how quickly do you think you can achieve profitability?
Yeah, so our focus is really on unit economics that make sense for everyone. So we don't, I mean, I admire what Amazon have achieved enormously, and you have to accept they provide a great service because they offer logistics and all the things that you as a small business wouldn't want to do. We're just an introductory app. We're just saying, come through our search bar, we'll connect you to the merchant, and then we'll give you back what would have been paid to someone else to get your attention. So it should, as a business, and we've raised some good capital, the unit economics should mean that we're profitable relatively soon.
And what about gaining traction among the merchants themselves? You've obviously put out some names of people who are with you already. Who are your sort of targets? Who would you love to get on the platform?
So it's a great question. And I, having come from a different industry, the fintech world, really have been amazed at how complex this spaghetti junction is, because you see a Nike shoe, but it might be coming from Debenhams. You see an Adidas shoe, but it might be coming from someone else, Sports Direct. And then in between all of that, there's agency on agency on agency, and there's these platforms. So you've got Shopify, you've got Adobe, that I used to think did PDFs, but they happen to be a huge trading platform for advertising spend. So what we've spent the last 2.5, 3 years doing is plugging into all of these. So actually, a small business, if they're on one of those platforms, can onboard in about a minute and a half. And then they set their, what we call the CPO. So if you're someone that's selling products, you say, I'm prepared to give away 20% of the gross value, and then we give that back to the consumer.
And how will merchants be ranked on the platform?
A combination of things, obviously activity, so seeing where people are going, but also we're going to reward what we call the loudest cha-ching. So, you know, what's the best deal of the day? The beauty about what the team came up with is, at the moment, if you're advertising online, you're spending a lot of money whether you get a sale or not. Right, so you've got the sandwich board, golf sale down the road, that person's taking clicks all the time, but you might not get a converted sale. The beauty about this platform is you only pay when there's a converted sale.
Well, last night's sell-off on Wall Street, during which the S&P 500 suffered its worst performance since September, was followed by declines for equities overnight in most of the Asia-Pacific region, only the Hang Seng in Hong Kong bucking the trend. Well, in Europe, stocks are also trading to the downside this morning. Here's the picture in continental Europe right now. Any time now. Talk among yourselves. There it comes. All of the main indices in negative territory right now. Talking points today include the Finnish logistical solutions group Cargotec. That's up 16% in Helsinki on strong quarterly results, while car maker Stellantis, the owner of Vauxhall, of course, down another 10% in Milan following yesterday's profits warning. Well, here in London, the FTSE 100 is just about holding its head above water right now. That's thanks partly to the drug heavyweights. Actually, the FTSE, look at that, it's more or less unchanged. It would be in negative territory, but not for AstraZeneca and GSK. Both of those have chipped in 12 points to the index on their own on the latter's strong results this morning. Outside the FTSE 100, investment services group AJ Bell is up some 3.5% on supportive broker comment, but Aston Martin Lagonda is down 7% after it reported a bigger than expected quarterly loss. Meanwhile, the gold explorer Oriole Resources is down 6.5% after the chief executive unexpectedly resigned. On the foreign exchange markets, while the dollar has been trading at close to 5 months highs ahead of tonight's interest rate decision from the US Federal Reserve, sterling just about unchanged against the dollar right now. It's off an eighth of 1% or so against the euro. As for the oil price, well, that has fallen for a third consecutive day on news of rising US crude inventories. Barrel of Brent crude will currently set you back $85.31 a barrel. That's down a little under 1.25%. Would you want to be this morning is Alex Stewart. She's Credit Portfolio Manager at Schroders. Alex, good to see you as ever. There's an old stock market saying, sell in May and go away, come back on St Ledger Day. I mean, the market started selling in advance of May this time around.
It has a bit, yes, but, you know, people do love seasonality in markets, and it is a saying that comes around every single year.
But obviously, you're a credit specialist.
Yes.
The bond market has had quite a repricing already. It feels like equities are belatedly coming around to that as well now.
Yeah, absolutely. I mean, obviously, the main reason for the bond markets repricing and taking out the expected rate cuts has been because the economy's actually started turning back up again. So clearly for stock markets, they were still quite happy. But I think given how much we've now seen the repricing, that we might have no rate cuts at all this year, it's begun to affect risk markets as well.
I guess it's difficult for your counterparts in the equity markets, given that if one takes Q1 earnings season, which we're now going through, it's actually been OK. I mean, we've got good numbers overnight from Amazon, for example.
I mean, that's the thing. I mean, things have been doing quite well. And so obviously the stock market has been quite happy from a growth perspective. And if we have no landing, then arguably that is still, you know, quite a good situation. But everybody was expecting that borrowing costs were going to come down. And it doesn't look like they are anytime soon. Yeah,
well, speaking of borrowing costs, I mean, we talked about this the last time you were on the programme, the fact that mortgage rates started to tick up again lately.
Yes.
And that's shown up in the figures from Nationwide this morning.
Exactly. I mean, it's been more surprising that the housing market has fallen again, and that is obviously it is connected to people looking at where mortgage rates are. A lot of fixed rate mortgages been having to refinance, and the rates are ticking up again.
How would you square this with some of the evidence that we've had from the housing market? I mean, Zoopla the other day, for example, told us that activity is well up on last year. They're expecting something like 100,000 more transactions this year than last. I mean, surely that can't hold if mortgage rates do start to tick higher again.
I mean, that's the thing. I think a lot of what we've been seeing sort of more recently at the start of the year is actually reflecting the fact that mortgage rates fell because we had these expectations of all the rate cuts from the Bank of England. So now that these are no longer expected to be as many or as soon, then rates are ticking back up again. So there's a bit of a lag, and we might see a bit more weakness going forward.
Yeah. Now, the big event in markets today, of course, the Federal Reserve decision this evening. What are you looking out for?
Well, I mean, nobody's expecting that they're going to make any changes. Obviously, I think a lot is going to be looking at whether they've changed their dot plot, as they talk about, which is their expectations, because at the last time that they did this, they were still seeing 3 cuts this year, which, you know, the market is now sort of suggesting maybe 1, maybe none.
All right, Alex, got to leave it there. Good to see you as ever. Thank you.
Thank you.
Still to come here on Business Live, Maintel, the provider of cloud services to JD Sports, BNP Paribas and Liverpool City Council, poses a rise in sales. I'll be speaking to the chief exec next. Don't go anywhere.
Emirates premium economy. Maybe one day all airlines will have seats like this. Fly Emirates, fly better. Thank you.
Welcome back. We've got some breaking news to bring you that's just reached us from the Home Office. This is a statement from the Home Office. It says the first phase of detentions is underway for Rwanda relocations. The statement says detentions are underway as the government prepares for the first flight in 9 to 11 weeks. The action follows passage of the Safety of Rwanda Act last week and the ratification of the UK-Rwanda Treaty. The Home Office says the first illegal migrants set to be removed to Rwanda have now been detained following a series of nationwide operations this week. Operational teams within the Home Office have been working at pace to swiftly and safely detain individuals in scope for relocation to Rwanda, with more activity due to be carried out in the coming weeks. The action is a key part of the plan to deliver flights to Rwanda in the next 9 to 11 weeks. This activity, this is a Home Office statement, this activity forms yet another milestone in the government's wider plan to stop small boat crossings, which we, the Home Office, the government, reduced by more than a third in 2023. The Rwanda policy will deter migrants from making perilous journeys across the Channel by showing clearly that if you come here illegally, you cannot stay. There's a statement here from James Cleverly, the Home Secretary, in which he says, our Rwanda partnership is a pioneering response to the global challenge of illegal migration, and we've worked tirelessly to introduce new, robust legislation to deliver it. Our dedicated enforcement teams are working at pace to swiftly detain those who have no right to be here so we can get flights off the ground. This is a complex piece of work, but we remain absolutely committed to operationalising the policy. Crikey's mangled his metaphors there. To stop the boats and break the business model of people smuggling gangs. Obviously, Prime Minister's Questions is coming up in just over 10 minutes from now. I imagine that will be something that Rishi Sunak is keen to get out. Now, on the face of it, JD Sports, Knight Frank and Liverpool City Council might not appear to have that much in common, yet they, along with the charity Christian Aid and the French banking giant BNP Paribas, are all customers of Maintel, a provider of cloud networking and securely managed communication services to both the public and private sectors. Today, the company reported full-year sales of £100 million for 2023, up 11% on the previous year, but that also announced a widening of pre-tax losses from 4.9 to 6.8 million pounds. With me now is Dan Davis. He's Interim Chief Executive and Chief Technology Officer at Maintel. Dan, good to see you this morning. For those not really familiar with you, can you explain simply what you do?
Yeah, of course. Thanks for having me in. So Maintel are a communications technology managed service provider. So we help customers with their digital transformations, and we do that in three main ways. So we help their people be more collaborative and efficient and productive using unified communications and collaboration technology. We help them obtain new customers and delight and retain their existing customers through using customer experience technology. And we help connect their people and their guests and their partners to their applications and their data, wherever those applications and the data may be, and wherever the people may be in the hybrid working environment that we're in today, in the most secure and efficient way possible.
That sounds like you're competing across a number of battlefronts. Who do you regard as the main competitors? Is it the likes of Salesforce?
Not really, no. So it depends on the sectors we're serving. So we work across both private and public sector. So you've mentioned some of our great customers there. We're really proud of some of the names we've got across large retailers like JD Sports and Harrods, and in financial services with the likes of Vanquis Bank. And over on the public sector, we've got a big footprint in local government, but we have a significant customer base in the NHS, serving nearly 50% of the UK's NHS trusts, from NHS Highland in the north down to Guy's and St Thomas's in London. And our competitors vary by those sort of industries. So the public sector buy through specific frameworks where we'll come across the likes of BT and Daisy and those sorts of organisations. And then maybe in the private sector, in contact centre, we might come across the likes of Sabio, IP Integration, those sorts of organisations.
Now, you say in the statement that sales growth accelerated towards the second half of the year. Where were you seeing demand most strong?
In terms of last year, the performance was really driven in a few different areas. So there was a restructure that took place as part of the strategic review in the first half of the year that delivered both top line and bottom line savings improvements. But some of it came from we had a difficult year in 2022. Off the back of the pandemic, there was the well-covered microchip shortage and hardware crisis, which affected our ability to deliver most of our kind of connectivity-based solutions. So although we were continuing to close those deals, there were some that we weren't able to deliver. So we were able to benefit 2023 when that hardware became available again in terms of unwinding that. We also had price increases in the year, which helped the top line, but clearly they were counteracted by inbound price pressures from suppliers. And the other main area really that improved last year was because the hardware became available again, we were able to return our professional services organisation to high levels of utilisation.
That's been quite a turbulent few weeks for you in the boardroom. Your executive chairman left recently, you're interim CEO now. What more can you tell us?
So really, it's about natural evolution. And what we're focused on is really focusing in on the execution of the strategic transformation. So the phase of that we're in right now is really focused on brand. So we've got a brand refresh coming later in the year. Focusing in, laser focused on our customers. It's not rocket science in business to say that, if you've got happy customers, they stay with you longer, and while they're with you, they spend more. And I guess most importantly, focusing in on developing our own intellectual property, which started with the launch of our Maintel application platform, which we announced in March. That gives us a really innovative way to rapidly develop and deploy applications and integrations for our customers. So that's really there to enhance the core services we deliver that uses technology from our global technology providers and carriers, which are all household names in the technology space. But we use our own intellectual property to enhance those services and integrate them with the customer's environment. I guess it helps us stand out from the crowd.
OK, Dan, got to leave it there. Appreciate you joining us today. Thank you.
Thanks, Ian.
Just before I go, a reminder of the news that we've broken in the last few minutes, which is that the Home Office has said that detentions of illegal migrants who are set to be deported to Rwanda later in the summer have begun over the last few days, thanks to a series of operations. That's it from me for the time being. I'll be back at 4:30 with our afternoon edition. Hope very much to see you then. In the meantime, do stay tuned. Coming up next, it's Prime Minister's Questions. Jane Secker will be taking you through that with our Deputy Political Editor, Sam Coates. Stay tuned. Thanks for joining me. See you later.